Mark Bertoli joining us on the show from Abbott Wealth Management. Happy Wednesday to you.
Yes.
Yes. Today we are talking a little bit about the fourth quarter earnings for our Canadian banks and the effect of the low oil prices.
Right. Okay. Yeah, it's exciting times for people like me. You know, the bank's earnings reports coming out. Whew.
They always seem to do well, the banks, don't they?
They do. They fall under our category: difficult to replicate, difficult to compete with, and difficult to live without. So our Canadian banks are profit machines. Yeah. So I sent over. You know, it was interesting at the beginning of last year. Oil prices were falling, and there was a lot of talk about the banks having a rough time in 2015. So I looked back at 2014 earnings and I looked at 2015, and really we had record earnings last year for the banks of all times.
Let's take a look at the charts. We have a couple that you sent over.
Yeah, okay. So this one is for last year. Net income, or for the last quarter.
Okay.
Royal Bank, for instance, made over $250 million last quarter.
Okay. Wow.
And it actually topped the year before during the same period of time. So you can see the earnings, net income of TD and CIBC, 2.1 million. So, you know, they've done very well in the period. And what's important is that they've done better than what was expected with the oil crisis coming on. I had another chart that I compared 2014 versus 2015. You can see at the top of the chart for the Royal Bank. The Royal Bank accomplished something last year that has never been done before in Canada. They had a profit of $10 billion in 1 year.
That's significant.
So, and then they followed it up, of course, with the fourth quarter with more than $250 million or billion, 250 billion in the quarter. So, you know, pretty amazing stuff. They thought that they were going to get hit with the oil. There's a lot of things going on with our Canadian banks. I always watch golf on the weekends, and you see a lot of players with RBC on. TD has a heavy presence, and what a lot of people don't realize is that our banks are diversifying outside of Canada. One statistic hit me the other day. TD actually has more branches in the US than they do in Canada. So our Canadian banks are good businesses. They're investing where they need to. Scotiabank has a huge presence in Latin America, and they're doing well. They're diversifying throughout different areas of the economy, through wealth management, through direct operations, and they're hard businesses to compete with.
Why didn't the sagging oil industry affect them?
Well, I think one of the reasons is they're well diversified. And we talked about this before. Alberta has a problem with oil, but that is actually a stimulus for the rest of industry throughout North America. And by the banks diversifying into the United States, they're tapping into businesses that are growing and taking advantage of low oil prices. So well-run businesses, diversified, and don't have all their assets or loans in one area. Yeah.
Fantastic. All right. Anything else you want to mention about the banks, or do you want to get on to the question?
Well, you know what? The question of the day, I'm going to tie back into the banks a little bit.
Okay. Well, let's put that back on. Put on the screen. At what point should you consider selling an investment?
Okay. So we just went through volatile times, and I'm going to go back to what you own and why you own it. So I always ask the question: is it broken, or does it appear to be broken? So there's two different things there. I recently looked at a company. It's 80% of its revenue was a support to an engine manufacturer. This year, that engine manufacturer just announced that they're bringing that product in-house. So they're manufacturing themselves. So that means this company, 80% of its revenue is gone in one day. In that case, it's broken. Right? So you want to look very carefully about what the exit strategy is. You'd be looking at what is that company going to do to replace that revenue that they've just lost. That's a serious situation. The other side of this is, does it appear to be broken? And let's go back to the Royal Bank. From April of last year to present, Royal Bank stocks have gone down anywhere between 15 and 17%. Yet they posted the greatest profit ever in the history of Canada. Appears to be broken. What happened last year because of oil is we had a lot of foreign money leave Canada. And when they leave Canada, they sell everything. including our banks, which is the largest weighting in the TSX in our stock market. So that causes downward pressure on the banks, so they may appear to be broken. The nice thing about when things appear to be broken is usually a very good opportunity for future gains.
Yes.
So.
All right, well said. Mark Bertoli, thank you for being here today.
You're welcome.
Information on the screen at abbottwealth.com, info@abbottwealth.com for the email address, as well as the phone number 372-3736. We are back in 2 minutes. Stay with us.